So in order for this strategy to make sense, I'm going to give you guys a quick rundown on my origins of the relationship with American Express so I can explain how this credit limit strategy or tactic works and how it's going to pay off in the long term. My journey with American Express is brief at the moment. At the time of this recording, I just joined or got my first card with American Express in April of this year of 2023. I got the American Express HILTON SURPASS card first. I actually was taking a trip to Chicago for Easter, and the card had a particular offer at the time. I was also looking to get into the American Express ecosystem. I'll back up for 2 seconds. I do have a high yield savings account with American Express. This is my first credit card with American Express. They had a particular offer. I'm a HILTON, loyalist, if you will. And I was also ready to get into the AmEx ecosystem. So I took advantage of it, got the card, and was able to use it on my trip at a really nice hotel, by the way, and get some nice upgrades. That having been said, that card started with a $9,000 limit. That was a personal card, the HILTON SURPASS. Was able to use that card. I believe it was May 11th that I applied for the business HILTON card. Similar circumstances, great offer. It was like a free night certificate as well as 150,000 points for a reasonable spend, maybe like $4,000. So I applied for that card, which at that point was about 40 plus days after the original card that I got, the HILTON SURPASS. I got the HILTON business. I did it under a sole proprietorship for those of you who are curious. From that point, I got a $10,000 starting limit with them. So that's $19,000 with American Express in less than 2 months. Not too bad. So fast forwarding a little bit, after hitting the spend requirements on both cards, paying them down subsequently after, I applied for my first credit limit increase with American Express on my personal HILTON SURPASS, at which, again, the original limit was $9,000. And now I was able to apply for $20,000, meaning that total limit was $20,000. Got approved for an additional $11,000 instantly. Within a few seconds, it came back with an automated response approving me for my credit limit increase on that card. That having been said, the data points out there have made it clear that with American Express, once you're in their ecosystem, it's quite possible to get up to 3 times the limit on the card, especially if you're not already at a $30,000 to $30,000+ range on the card. It's been data points out there saying that after about 30 or 40,000, 35, 40,000, that you can start to deal with financial audits where they want to start seeing documentation of your income and things of that nature. So having started at a relatively lower limit with them gave me plenty of wiggle room. Why did I not go in applying for that 3x limit and allowing them to just counter me? That's the substance of this video. The answer to that is, I don't want American Express to see me as a greedy borrower, as a taker. This is the strategy and the tactic. I want you guys to pay close attention to this. This is what this is about. With any lender you're working with, especially these higher ranking, bigger pocket having lenders, they have the infrastructure and the technology to study dozens and dozens and dozens of data points on each of us. They are studying our behavior as consumers and borrowers. They're not just studying your credit report. They're not just studying your credit score, your income. That's the surface level underwriting that we all see and talk about. We don't know the level of data they have on us as individuals. And I want to make sure, and as I'm recommending for each of you, that you are cognizant of the image you're projecting to these lenders if you want higher limits and more funding from them down the line. I am not able to put more spend on that card to justify a $25,000 or $30,000 limit at this time. Especially saying is that my goal is to expand on the business side with them as well as acquire more cards in the next 3 to 6 months. I cannot hit a healthy spend level on a $25,000, $30,000 AmEx at this time. I have multiple other banking relationships that I'm also working my way through and putting spending on several other cards. And I do well income-wise for a living. I have reasonable spending that kind of keeps up with that lifestyle-wise. But that having been said, I don't necessarily have the spend to make that $25,000 or $30,000 limit worthwhile. This is what this ties back to lender psychology and them studying our behavior as borrowers and consumers. It's very important. When you're going into a new ecosystem, they're always doing it, but especially coming in the first 90, 60 days, year or so, they're desperately trying to find out what kind of borrower you're going to be, what kind of client you're going to be. As deep as the pockets of American Express, Chase Bank, and some of these other institutions are, they're not infinite. The money is not infinite. They have to be very strategic on who they're lending their money out to get the highest return at the lowest risk. Your job as a borrower is to go in and be as profitable for them and as low of a risk to them as you can be if you're looking to truly expand that relationship, not only now, but in the future. I'm aware of that. I'm a banker by trade, so I understand these different psychologies outside of the basic underwriting that we spend so much time talking about. Which bureau are they pulling from? How many inquiries did you have when you got approved? How many accounts did you have? All this other stuff is cool. It's surface level. To be completely honest with you, it's surface level. These companies have so much more technology, so much more reach, where you're spending, how you're spending. They're looking at all of your behavior and calculating it into some kind of metric to determine the quality of client and borrower you are. So yes, could I have probably gotten another $5,000 or $10,000 instead of the 11 that I got on top of my original 9,000? Highly likely. The approval was instant, no kickback, no counter. It was instant. Highly likely I left money on the table. Why am I okay with that? I know that I'm going to go to them for a credit limit increase on my business card before this year is out. This recording is happening in late July. In the next 2 to 3 months, even though I've had the card long enough to apply for a limit increase, I'm being patient because I'm putting healthy spin on the card, paying it down effectively. And even though I probably can apply for it within 90 days of getting it, I'm going to wait. I don't desperately need it at the moment. And I want to make sure that the image I paint for American Express, as in any lender, is one of sustainability. I'm not coming in just taking. I want to make sure that I can hit the spend requirements that make sense for the limits. I also want to add to my high yield savings account and increase the relationship there. I want American Express to see me as a long-term, sustainable, growing, low-risk client, because the $25,000, $30,000 now is going to be pocket change to the 6 figures that I'm going to get from them in the next 6 to 12 months. And that's facts. So I want to make sure that each one of you are fully cognizant to the image you're painting to these lenders. Are you going to go in and take just because you can possibly get approved in the short term for a lot of these different cards and limits? Or are you going to strategically go in and incrementally build a relationship sustainably over time? I'm applying for all of these limits and all of these cards just because I got a good shot at getting approved, but my income hasn't increased on my applications if I'm being truthful. My spending isn't keeping up on the limits that I'm getting. So yes, in the short term, you'll run it up on these different lenders in the short term. What's going to happen when they catch up to you over an amount of time? You're going to burn out. Your spending is going to burn out. Your income's not going to change very much if you're legitimate, and you have to be able to prove it at some point because you're getting so many limits. American Express is very, very generous with the growth potential of the fact that they don't pull your credit constantly per card. Once you're in with them, if you're not a high risk customer and you're not getting yourself bucketed or blacklisted, what they call pop-up jail, various different terms they have, you can go in and get card after card after card. Up to 14 total cards is the data points that's out there with American Express, if you do it in a timely and effective fashion. That's not including their business line of credit and other products that they offer. I'm thinking long-term and bigger picture. I'm not just going off of the hype and thrill of getting approved for this card, getting approved for that card. Oh, I can get this limit. In the short term, that's cute. It's nice. It feels good. But what happens in a year and a half from now, when I need to do, bigger transactions, when I need to have a bigger deal with American Express and any other lender, and I need more money from them, and I need it for an actual business venture and not just to prove that I can get high limits on my cards. That is what you have to keep in mind when you're dealing with each lender. Can I sustain the relationship that I'm asking for? And I have the maturity, not only as a banker at career, but just overall in my financial journey, to understand that. I want each one of you to keep that in mind, because these institutions are going to blacklist you. They're going to bucket you. Yes, you might run up 30, 40, 50, $60,000 with them overnight. It seems like 3 months, 6 months in, you're getting card after card, you're getting limit increase after limit increase. It looks good. It feels great. That high is going to kick off. It's going to die down at some point in time. And you're going to be stuck at that same 30, 40, or $50,000. And somebody like myself, instead of them lending you that next $10, $20, $30,000, it's going to go to me, because I was sustainable and I was patient and I continued to grow the relationship. I continue to be profitable. I continue to show low risk behavior. I want each one of you to take notes on this, because it's very important, and almost no other content creator is going to have the maturity to tell you this. Very few will have the maturity to tell you this. But being a banker by trade, I want to see each and every single one of you win. So I'm going to give you the insights that only the elite of the elite understand when it comes to building out high limits, getting access to unlimited funding with quality institutions. I want you to comment down below and let me know the recent institutions you've joined and the limits you've gotten, and have you been able to sustain that growth. I want you to talk about the institutions you plan to go to. This is exactly why I don't churn and burn. I don't bonus hunt. I love the travel hacking space, and every single one of those creators are amazing. But at the end of the day, they can have it, because they don't care about their credit report. They just want enough to qualify for these cards, run them up, burn out the bonus, and they scrap them as soon as they can. I'm not doing that. That's not my agenda. Yes, do I love free travel? Absolutely, all day and tomorrow. But at the end of the day, I know that I have much bigger plans for each institution that I'm banking with, and I want them to see me as sustainable, as a quality client on the other end of that table when it's time for the growth. So comment down below and let me know what your experience has been. Comment down below and let me know what wheels have I turned for you in this video. I want you to comment down below and let me know your thoughts. Other than that, to all my pioneers, welcome back. To my new viewers, welcome in. If you want to learn more about the channel and myself, you can start in the description, work your way to the About section of my channel, and obviously like and subscribe to the channel. Other than that, I want y'all to stay focused, stay in motion. I'll see y'all soon.
This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.